It's time for another 2-week market update for Southern California real estate data, and we can't wait to share this update with you. We're going to show you how COVID-19 is affecting last year's numbers and this year's number, and there are crazy differences. We're going to show you whether Los Angeles, Orange County, and Riverside are still blazing hot sellers markets for single family and multifamily. And then we're going to dive into the notices of default for Q1 for 2021 and compare it to years past. And that's important. That's the first step in the foreclosure process. And you won't believe what we found. And we have a new worry about the market, and it may not be what you think it is. Hey there, Christian Walsh with Wire Associates. We're real estate brokers based in Southern California, helping buyers and sellers and tenants and landlords during these crazy days. By the way, for housing market updates every 2 weeks in Southern California, make sure you subscribe to this channel. We have a big update for you in the numbers for halfway through April, and it's a strange time of year. Every year it's a strange time of year, and this is why. Because of spring breaks and Easter holiday jumping all around, and some folks are taking breaks before Easter, some of the week after Easter, some of the week after Easter. That's what my kids just finished up. So there's a lot going on with the spring breaks, and then we have tax days. So April 15th is our usual tax day. Last year it was pushed due to COVID. This year it was pushed for individuals due to COVID to May 17th. So these are even stranger first 2 weeks of April this year and last year than other years past. But it's important that we look at these numbers every 2 weeks. So if you're ready to take a dive into the data, hit that like button and let's get started. Time to dive into the data yet again. In the data, you're seeing the crazy effects of COVID. Now that we're into year-over-year data that reflects COVID from last year. And this market update with the Orange County data, it is crazy. Things are moving along in generally a similar trend. Then COVID hits, everything drops, and you can see that the escrows drop significantly. So as I've said in videos in the past here, as we're getting into the COVID data, the buyers figured it out sooner and stopped writing offers. But things quickly rebounded back as far as escrows and sales, but listings are still low. And we have like a collision of all these numbers for Orange County. It's crazy. We don't have a flop of extra properties going under contract versus listings, but they're all tied up. So that's still a very crazy seller's market. And then similar thing in LA. So LA, we have the bands moving along, the dip for COVID, and then things move back up. And we can see the listings in all these areas are not matching year-over-year numbers. So listings are still down while escrows and sales are way up. So you can see here that we also have a similar case where LA market is hot. And Riverside is another one. We've talked about people in Orange County, drive until you qualify. They're looking in Riverside, and Riverside has continued to be a crazy seller's market with a lot of competition. And you can see all the numbers again are crashing together. They move along, dip for COVID, and then they're all crash and overlap. So we don't have the twist in listings versus escrows, so that's a good sign, but still an extreme seller's market. Moving on to the multifamily data, so you can see, and I was reporting this when I was doing these market updates early on in COVID, that multifamily took a huge hit. Look at how far the number of escrows dipped in Orange County. Very few properties were trading. We didn't know what was going on. We were all worried about things with COVID. And then tenants weren't paying rent. We weren't sure how that was going to shake out. Things have rallied since. We found out that there's people not paying, and it's very difficult for a lot of tenants and a lot of landlords, but it's not as bad as we had guessed it would be. A lot of folks have rallied and continued to pay, and now we have rental assistance dollars that are coming into effect from the national government through the 2 bills. The stimulus plan passed in December. Those funds are being distributed now to renters and landlords, and the funds from March, the American Rescue Plan, those will be going out, and that's helping with back rent for those who need it the most. You can see Orange County multifamily, it's definitely moving quickly, and I see that out there where inventory is getting snapped up. It is definitely a seller's market for Orange County multifamily, but watch carefully because, particularly with multifamily and the smaller numbers we see here, things can flip very quickly. Suddenly we can get too much inventory. LA, definitely, we see that same trend. Those listings are always significantly above the number of properties that go under contract and sell in LA. That's just the nature of Los Angeles's market. So it's still a strong market. Things are rallying back, but not as much of a seller's market as we have in Orange County. And Riverside, we got numbers all over the place, but you can see the interesting trend here is we're starting to see the number of properties under contract and new listings colliding like we saw in single family, and this means it's become an extreme seller's market in Riverside. Again, watch inventory for multifamily because the numbers are smaller. Suddenly things can flip. If we get 10, 20 extra listings, suddenly it becomes a buyer's market for multifamily. Now we're diving into the foreclosure data, and we have the notices of default for the first quarter going 2021 on back, and we've got here all the way back to 2015. We'll show you one of the last slides what 2011 looked like. There's a reason we left it off, and I'll show you why. But these are the notices of default. So this is the first stage in foreclosure. People have missed a payment, 128 days later or more, the notice of default will go out. And you can see at any given market, we have notices of default going out. It's pretty consistent, in fact. If you look at Los Angeles, anywhere from 2,800 to 3,200 or so, pretty tight band going back. But then you see COVID. You see the effects of COVID in 2020 and 2021. And the numbers decreased in 2020 because COVID hit and people didn't know how to react and foreclosures stopped. Then we had the CARES Act and that slowed down foreclosures, and that's continued. And there's additional guidance coming that we'll talk about in a minute. But you can see that the notice of default dropped off significantly. A normal, healthy market will have any given numbers of folks going through foreclosure, and we don't have that right now. And if you zoom in, you can see, so 2019 and before those were standard years for notices of default, dropped off into 2020 and 2021. If you add up the 734 in LA that we had the first quarter 2020 and the 656 we had the first quarter 2021, those are less than half. In those two quarters, those are less than half of what a normal quarter is in Los Angeles. So that's very important. We're behind on foreclosures. That's all there is to it. So not only do we have low inventory, and we could use foreclosures, as much as I hate to see people losing houses, there's a certain number in any given healthy market that need to come to market. We're also getting behind not just on COVID foreclosures, but also folks who normally would be foreclosed on. So these numbers shouldn't be where they are. They should be higher. So we're way behind, and this could potentially lead to a wave when things start to move back to normal. And then just to compare 2011, so the data sunsets about 10 years back, and we're trying to get some earlier data to show you. But you can see the dramatic difference. In Los Angeles first quarter 2011, we were still in the thick of the bust. We had over 8,000 notices of default go out in that first quarter. And you can see, you compare that to 2021 and 2020, and that's less than a tenth of that number. It's crazy low numbers. So you can see we're nowhere near the crazy high foreclosure numbers that we had in the previous bust. In fact, we're nowhere near normal numbers in a normal market. So we've got some catching up to do on foreclosures. What to watch in the real estate market 2021. So there's a lot we're tracking, and we've talked about these things before, and we're going to keep talking about them. Obviously the vaccinations and the rollout as more and more folks take the vaccination and things start to open up. In California, we're scheduled to open up on June 15th and get life back to normal. We will be tracking that to see how that goes. Mortgage interest rates, those are starting to tick up, and they may have to go up dramatically if inflation starts to rear its ugly head. So we're definitely tracking that. The other stimulus plans. Has the economy had enough stimulus? Are we going to see things improve for the bottom of the K? Obviously, there's folks doing very well at the top, and then there's folks not doing well at the bottom. Are we starting to get that bottom of the K up, or is it going to take some more stimulus? Do we need another package like the infrastructure bill to be passed? So definitely watching that. Of course, there's non-payment of mortgages, and we're going to touch on that again, and non-payment of rent. There are now federal dollars are trickling out through the states to landlords and tenants who need it most to cover back rent. So we're getting back on track in those things. Eviction moratoria. We have the CDC eviction moratorium on the national level. In the state of California, we have SB 91, which covers evictions during COVID-19. So these things are set to expire June 30th. The question is, will they expire? And if they do, what will be the effects of that? And if they don't, will they be extended and how long? So we'll be tracking that. But the number one thing, especially after going through the data today, that we're looking at is there are not enough foreclosures. So mortgage forbearance has been going on. The Consumer Finance Protection Bureau is now stepping in and telling servicers of mortgages that they may not be able to foreclose or start the foreclosure process until 2022. And this is great. We want to see people get back on their feet. The problem we see in the data is we don't even have a normal level of foreclosures. In any given market, there will be foreclosures. There's properties that go back to the bank and are sold, and that's inventory in our market. We can see we're low on inventory, and early on, I didn't think the lack of foreclosures had much of an effect. But as time goes on, as we get into 2021 toward the end and into 2022, this could be some inventory that would help us get back on track and kind of deflate the bubble in values a little bit. So that is the number one thing we're watching. We're going to bring out some more content on this, but we're going to keep tracking the foreclosures and see if they start to tick up. I don't think they will, but we're going to show you data. We're going to compare foreclosures. We're going to compare REOs to see just how many are missing in the marketplace. So make sure you subscribe to our channel if that's something that interests you. Also, subscribe to our free weekly email newsletter. Those subscribers get copies of the charts that you saw. So make sure you subscribe. We have a link below. Leave a comment below and let us know what you're seeing out there, where you think the Southern California market's headed, California and the rest of the United States. Let us know where you think the market is headed. We would love to hear that. Thanks for tuning in. This has been Christian Walsh, Wire Associates, and we appreciate you.